Arguably, the main result, or the most anticipated result from the Wealth Report, is the PIRI 100, which stands for the Prime International Residential Index. And it tracks 100 luxury residential property markets around the world, both cities and second home markets, so the likes of ski resorts and also coastal markets and rural markets. And the good news for investors this year is that the index overall rose by 2.1%, so that's up from 1.4% in 2016. The top performers this year were Guangzhou, Cape Town, Aspen, Amsterdam and Seoul. Each of these markets recorded annual growth above 13% year on year. And we had 11 markets that recorded double-digit annual growth. So what was the surprise result in 2017? I think after probably a decade of weak growth across European markets, we saw resurgent European cities. In fact, we had 4 of the top 10 this year related to European markets, and these were Amsterdam, Frankfurt, Paris and Madrid. And it wasn't all about the cities. We also saw that a number of second home markets, in particular I'm thinking about the Algarve, and Liguria, the Italian coastline, rose up the rankings, and these were markets that had suffered significantly after the global financial crisis. So how did China perform in 2017? Well, Guangzhou, although it led the rankings at 27%, we saw a notable slowdown in other first-tier markets across China. So unlike in 2016, when Guangzhou was joined by Beijing and Shanghai and occupied the top 3 markets within our index, in 2017, Guangzhou was the only entry for China in our top 10. In the US, we saw that there was steady performance. Aspen recorded strong price growth, but actually this was because sales and prices dipped in 2016, so it was more of a market correction. And also we saw a high activity from foreign buyers, many of them motivated by the desire to hold a US dollar asset at a time when interest rates are rising, and also as a result currency is likely to strengthen. Elsewhere in North America, there was a slowdown in the markets of Vancouver and Toronto, primarily as a result of the capital controls that we saw from China, but also due to the foreign buyer tax that's been implemented there over the last couple of years. So what's our outlook in terms of prime residential markets in 2018? Well, we're tipping Paris this year, primarily because of a strengthening economy, a real lack of supply, but also the Macron effect, which is boosting buyer sentiment, both from investors at home and internationally as well. So the report this year includes our forecast not just for Paris, but for 13 other global prime residential markets as well. Leading on from that, we've also got our Peak Performers article, which, using the help of our global international network, we've asked them to come up with neighbourhoods which they feel will really outperform their wider city market in 2018. And that could be for a variety of reasons, either because of new transport improvements such as Crossrail here in London, or because of potentially gentrification, or maybe because of a lower relative value compared to the wider market.